RapidRatings releasing a new report surveying executives and experts about the global supply chain in 2025. And according to the report, a majority thinks supply chain disruptions will get worse before they get better. For more, we're bringing in James Gellert, executive chairman of RapidRatings. James, it's good to see you. So I guess, first of all, we should say that supply chain disruptions are ranking among the highest risks for 2025 in the eyes of the folks who took your survey?
Yeah, absolutely, Julie, and it's good to be with you again. There's no question that supply chain has been on everyone's minds, and certainly every company with any kind of global footprint, whether they're buying from or selling to outside of the U.S. But what we found really interesting in our survey this year is that when asked to rank the biggest risks that people saw, they listed geopolitical risk, tariffs, and economic unrest as the top three. And that's particularly interesting in the light of supply chain over the last probably 5 to 7 years, where you would have always seen cybersecurity risk as being one of the top two. So the fact that that has sort of slid down, it's now at number 4, and these other aspects, which are really all about trying to understand the challenges of the business environment and the cost base of companies and suppliers due to tariffs, interest rates, inflation, and so forth. All of these are on everyone's minds.
Well, and in the case of something like cybersecurity, you hire a cybersecurity firm, right? And I mean, you don't know where the threats are coming from, and it doesn't mean they're all going to be managed, but there is a remedy. In the case of the supply chain disruptions, nobody knows what's coming. So how are these companies modeling and managing that risk?
Well, every major, but let's just say the Fortune 1000. The Fortune 1000 have supply bases that span from domestic to international companies. And interestingly, about 75% of all of those companies' supply chains are made up of private companies. That may not be by spend, but it could be by criticality. So companies that have a big impact on the reputation or revenue disruption or the ability for a company to function well and properly. And managing the risks in those businesses often comes down to focusing on the financial health of them, because the financial health of those suppliers is what drives their ability to manage the risks like cybersecurity risk, or allows them to be a good partner in innovation and product development and the delivery of quality products without faults and on time. And all of these are very important historically in supply chain, and even more now. But when you start to throw on the risks of disruption to those suppliers from tariffs and high rates and continued inflation, you start to have these weaknesses that build up in supply chain. So the Fortune 1000 are trying to get ever more mature and sophisticated in how they manage those risks and how they look at each one of those suppliers to make sure they've got the most resilient supply chains possible.
Well, and then in turn, James, it's your job to look at these companies and see which of them is most at risk. You know, they're assessing the risks, and then you're assessing their risk level as well. So from your work, what have you found in terms of, are there particular industries, are there particular geographies? What areas do you think could potentially be most at risk from these types of disruptions?
Well, interestingly, with the risk of tariffs and counter tariffs and line item tariffs in particular, you've got the challenge that every industry is at risk. And we've seen, and through the survey, we found 81% of companies said that they have had a supply chain disruption in the last 2 years. And 30% of those disruptions cost the companies $5 million or more. And our clients span over 25 industries and are all global. So the companies that are being affected by all of these economic challenges and geopolitical challenges are really very widespread. It's too early to see if there's going to be a winning industry. There certainly are some countries that are seeing an upsurge in the reshoring of business from, let's say, China, where clearly there's a tariff interest by the current administration, to countries like, say, Vietnam.
Right.
But even then, there's the risk that that more tariffs get put on goods that come from China through another country. So no one is yet saying that there are winners and losers here. And generally speaking, in a trade war, there are no winners. There are just degrees of losing.
Well, speaking of degrees of losers, just quickly here, you pointed out to us that bankruptcy rates climbed last year. Do you expect them to climb further this year as a result of all of this?
I do. I think we'll continue to see them increase globally, and we'll also continue to see restructurings increase. Last year we had a 2-to-1 restructurings to bankruptcy rates, usually about 1-to-1. So the fact that more companies are proactively engaging with those who have lent them money is a pretty interesting sign. But you've got to keep in mind that we're coming off of still, a decade or more than a decade of very cheap and relatively easy money for most companies to borrow and paper over problems that they may have operationally. And we've seen in our financial health ratings a significant decline, particularly in private and middle market companies that have been squeezed from operational standpoints and from cost of capital, cost of labor, cost of goods. And all of those things ultimately add up to a lot of stress in a lot of these companies that need to be identified in one's supply chains to make sure that the end downstream Fortune 1000 companies remain strong and resilient.
James, thanks a lot for your perspective and for sharing those survey results. Appreciate it.